All right. Hi there, everyone, and thanks for being with us tonight on this awesome Monday. Hope you all had a great day. So, first up, if you have any questions at the end of tonight's call for John, feel free to contact me directly. I am on Belinda K, so that's BELINDAK, @jlf.com.au. And feel free to give those questions to me and I can get an answer from John as soon as possible. So, on to tonight's topic, which is the one habit to ensure success and the most important real estate tip for the future. All right, so I welcome John. Thanks, everyone.
Thanks, Belle, and welcome along, everybody. The one habit, you've got to move forward, and you've got to have discipline to move forward. Do you know, if you study success ultimately is just discipline to keep on keeping on where everybody else quits and everybody else stops. But often when you're moving forward or when there's success, we become complacent. And the danger periods there's two dangerous periods, and this was drilled into me when I first started in property. When you're doing really well or when you're doing really badly, they're both danger periods, because often when you're doing really badly, you give up, it's all too hard. And when you're doing really well, you sit on your hands and become complacent and say, everything I do is just fantastic. When you're sailing along, you're in rhythm. And, the guys who wrote From Good to Great, the whole series Built to Last, Good to Great, and Great by Choice, their ultimate message was that the really great companies, the really great organizations do one thing better than everybody else. They just keep on moving forward. And that's a fantastic takeaway for us as individuals, and particularly in real estate, because if I look at my successful wealth builders over the last 10 years, there's one thing they've done. Every year, they've bought a property. Now, we've gone through, you can imagine, 2001, we had the Twin Towers crisis. 2002, 3, 4, we had a massive boom. Then 5, 6, 7, we had the stock market issue. Then the mining boom, where everything was going out to the mining areas. Then we had distractions from the GFC. Then speculation because of the government stimulus package, et cetera, et cetera, et cetera. And every single year, every single month of that year, there was a reason not to go ahead. But every year they kept on keeping on, and whether it was 1, 2, 3, or whatever. Now, we've got a moving market now, but often people wait and they're watching things happen, and that is the worst habit to have, because there's a great saying, and this was drilled into me day one when I first started this business over 30 years ago: if you're standing still, you're going backwards. And you're going backwards from every single perspective. And when I say every single perspective, your habit is to stand still. Always keep moving forward. And that takes intense discipline, intense mindset. Now, ways you can coach yourself on that: always be reading a successful book. And by all means, write to me, and say, John, what's a good book to read? Who are good people to study in this particular dimension? Always be reading an inspirational book of successful people. And they don't have to be successful business people. They can be anybody. I promise you that the Dalai Lama's secret is his discipline. A top sports player's secret is their discipline, and also their ability to keep on moving forward. I do a lot with the Gold Coast Suns, and they've got a great saying written on their wall as I go down to training. I was there this afternoon, go down to training. So the game's not over when the siren goes. The game is over when you quit. And that's such a truth, because the game of life, you'll get many, 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 many chances. If you keep moving forward, you'll keep on getting opportunities, you'll keep on getting chances. Discipline to move forward. So please use that as a personal takeaway, and think about the one things you do that preclude you, that cause you to stop, cause you to wait, or people that procrastinate, and just make a slight change, because a slight change today will have an amazing compound effect in the outcome in the next 5 years for you. Now, the most important thing about this real estate boom, what is it? It's what we call GFA, gross floor area. This is going to be a land boom. It will be where land sizes are coming down but real estate prices are going up. And this is something that the media will never understand. They talk about the median house price and how it's unaffordable, et cetera, et cetera, et cetera. What they're not getting is that land sizes are coming down and the land price is going up tremendously. Now, here's the facts and the science on that. The median house price in Sydney has gone up by circa 15.5 to 17% in the last year. And why I say 15.5 to 17, if I took June, it was 15.5. If I took July, it's close to 17. So call it 16% in the last year. But land rates have gone up by nearly 50%. We were selling 300 square metre blocks this time last year for $733 a metre. Those blocks are now selling to Sydney locals for $1,100 a metre. That's a 50% rise. Now, a 300 square metre block, GFA is the gross floor area, is the percentage gross floor area. I'm looking for things that I can buy where I've got a GFA of around 50% or less, even better. So we often, our template's always been, try and get the 400 square metre block, 190 square metre house. That's a 45% GFA. Now, you will trade income for growth. So yes, we've done and are doing 250 to 300 square metre blocks with 160 to 180 square metre house. So, around 60% GFA, but they're positively geared. And that's where, in a sense, it comes back to your discipline based on your ability to duplicate and get compound growth. So it's a mix of GFA and cash flow for you. Now, those two things are a great discussion point. And, I would even like you to ask me, send me your stuff. This is my income. This is my equity. This is my age. This is where I want to be, essentially, John, what would be my GFA mixed with my income? I had a good chat with some clients from Melbourne this morning about this exact subject, and we were talking about options for them. Now, they've got their own business, they've got a good income, they're looking to retire in 15 years. So what I was saying was, you really want to get something with a 400 or 500 square metres with a GFA sub 45%. 40% would even be better. Why do you want a GFA of 45%? It's because what's happening in our major capital cities is we've got nearly over 1 million people moving into Brisbane, Sydney and Melbourne each city in the next 10 to 15 years. Now, those 1 million people are going to populate the land you're buying, because instead of having one dwelling on that block of land, you'll have 2 or 3. You'll have the Fonzie flat, you'll have the granny flat, you'll be pushing things out, have share accommodation, et cetera, et cetera. Why is this coming? It's coming because we have 5,000 migrants moving to this country every year, and they're used to living in houses the size of around 22 metres per person. Now, Australians live in 98 square metres per person. So, we've got our view of the world is quite warped, when you think about that. But the other thing about Australians is 1 in 4 houses are occupied by single dwellers. So the maths will be single dwellers, and a lot of them are old retirees, are going to downsize, and they're happy with 50, 60, 70 square metres. Now, think about it. You've got a 400 or 500 square metre block. Your GFA today is 190 square metres. Now, that might be a 4-bedroom house that might have 2 families. Then you add your Fonzie flat on top of your garage. That's a 50 square metre that might be your pensioner. And this is 3 to 5 years away. And your granny flat in the backyard. And your GFA, maybe another 65 square metres, your GFA is only going to about 65, 70%. That's the most important takeaway I want you to think about for this boom. Now, this GFA, you can even do on lots as small as 300 square metres. That's right. You can add the Fonzie flat or add on to a 300 square metre block. So they're the 2 takeaways I want you to focus on. The most important is the market is moving big time. Melbourne's won the Pops for the last 3 months. I think its growth was 3.9%. So Melbourne's on fire. Brisbane's following. Sydney is gangbusters, as we all know. But the boom is in land. Make no mistake about it. And that's what Custodian have only ever done, land. And, the client says to me, John, I'm looking to buy a house, et cetera, et cetera. What about the house? So I'm not interested in houses. I'm only interested in the land. The house is just there to give you income to allow you to get compound growth. And for me, I look at the house and I look at the house designs, and then I play with the house designs to say, okay, how can I add on to this in 5 years' time to add on my dual occupancy, my triple occupancy, my quad occupancy, so that my single rental property goes to multi-rental property. The key to that is going to be land. Is really going to be land. And every single custodian house, I promise you, can be dual occupied. Every single one of them, subject to council approval, but the way it's designed, they can be, they're so simple as houses, they can be dual occupied. And another reason why we buy new is because then we know exactly what's being built. We know exactly what we can add on. We can increase the value of. So 2 takeaways. One is, please make a mental note. If you're standing still, you're going backwards. Now, this is important. It requires discipline, and I honestly think the reason why people aren't more successful is because we lack discipline. And the reason we lack discipline is because everyone's got this "she'll be right, I'll just wait and see what happens" sort of attitude, and it becomes endemic. We surround ourselves with those people. Please don't do that. Just make a point, particularly now, winter, great option to get up early, do that exercise, have that discipline. You'll feel $1 million. Don't wait for someone to do it. Do little things like that. But also, with your real estate portfolio, have the discipline to move forward now. The big reason, and the big thing that happened last week, the main banks brought their long-term interest rate, fixed interest rate, to sub 5%. In my lifetime, I don't think I've ever seen 3 and 5 year fixed rates below 5% for more than a few months. So you have got a limited window. Jump on it. Please jump on it, because if you can lock in a 3 or 5 year rate, even at 5% or 5.2 or 5.3, that is an amazing opportunity for you. Plus, if you focus on land and GFA and the fact that the markets are all moving, last year, and these are the facts. Last year, Sydney, this is June 30, Sydney 15.4%, Melbourne 9.4%, Brisbane 7%. And that's typical. Brisbane's the last runner and the late runner. So where you should be looking, where you can get the best land content, the best land per square metre with the lowest GFA. Let me help you with that. Send me your details and I'll find something specifically for you. If you're standing still, you're moving backwards. So always be asking a question, always be thinking about that, because this is a great opportunity. I hope that's given you a great takeaway tonight. 3 things to remember. One is personally, what's the habit that prevents you from being disciplined, that prevents you from moving forward? How do you short circuit yourself? Ask yourself that. Secondly, GFA, gross floor area. It's a percentage. And it's a percentage of your land. So think of it, some of you have already got properties. Think about what your GFA is now, and then how you could add on to it, because in time we'll have GFA of probably 70-80% the way the population's growing. And the third takeaway, and this is probably the most important for you right now, we have, in the last week, the lowest fixed rates. So, yes, you've got a window over the next 6 months where you can take advantage of that. My suggestion, do it. You'll be really glad you did. Have a great night, everybody. Don't sit on your hands. Don't become complacent. We have a moving market. That's what the numbers are actually telling us. Let's make the most of it and make the most of our own potential. Have a great night, everyone. Cheers.
Ladies and gentlemen, that does conclude our conference for today. Thank you for your participation. You may all disconnect.